Welcome back, everybody, to the daily show where I'll be breaking down the stock market. So, before we get started, please hit that like button, and that is greatly appreciated. And if you're new here, definitely consider subscribing. Now, 2026 is here, so happy new year to all of you guys out there. And if you are really serious about trading and you want to do this full time in 2026, you want to get live trading, daily trade ideas, swing trade ideas, all kinds of long term and short term setups. Definitely check out my link down in the description for Patreon. And now let's get right into the market. All right, so welcome back once again, guys. And 2025 ended with S&P 500 going up 16% gains, which is not bad, especially for your 401k and how the market was going down back in 2025 April. Now you can see market definitely not having a good time into end of the year, but that could be, where a lot of these, selling came from tax purposes. People are selling, to show some losses from the profit, and maybe just overall, just some profit taking from 2025. So you can see declining 67%, advancing 29%. We got Dow going down on Wednesday, last day of trading 2025, 0.63%. Nasdaq was down 0.76%, S&P down 0.74%, Russell going down 0.75%. 11 sectors, all pretty much in deep red. Real estate took a big hit, basic materials, industrials, and consumer cyclical. Stock market map, pretty much same thing here. You can see red across the board. Some stuff are just flat, but mostly down on the day. Fear and greed index. Well, we're back on fear after the selling we saw on Wednesday. You can see it's reading at 44, and we're just getting back into the fear here on fear and greed index. We got some key data. We got some S&P global manufacturing, which is tomorrow, Friday. Market will be open. Then we got Monday ISM, bunch of data next week, and that is going to move the market. You can see on Wednesday we got ISM services, JOLTS job opening. That's going to move the market. We'll see how the job market is doing. Then we got more jobless claims here on Thursday, and I think we also have some more unemployment rate. That's going to be the big one to watch, guys. That's going to be this upcoming Friday. Non-farm payrolls and unemployment rate. I think the market is looking for that, and we'll see. I mean, last time we saw one was 4.6, it was high. The forecast is 4.7. So definitely, I mean, it's not looking good. We'll see how that goes, especially going into Friday's session. And now let's get right into S&P 500. On SPY ETF, it's down 0.74%. So a lot of people are actually asking, where is the Santa rally? And I'm going to show you guys where was the Santa rally and what happened. So we had that drop right here, right? And from this drop, if you go and look at all-time highs, market was up over 3%. On here, SPY about $21. And now we're pulling back just after Christmas. So the Santa rally was there. We had a rally, and now we are cooling off. Now, if you're looking for a center rally in a different way, like we usually see into the new year, maybe that didn't take place, but it was there. You can see 1, 2, 3, 4 green days, and even here we had a doji and pretty much closing flat on the day. And Monday we gapped down, and since then we saw some selling into Wednesday into the new year. And now, if you look at my screen on this hourly time frame, we got a gap down here at 680.72. So we could be pulling into this gap. And if that happens, definitely that's a level that needs to hold. It's also with this trend line right here, you can see that 680 to 681. Now, if we get under that level, easily can come down to not only 674, we do have a downside well target, which is at 670, bottom of the range. Now we get some sort of a gap up and go tomorrow, or maybe even a green day when market opens. Watch out for the resistance right here. Now the 20-day will act as a resistant, 683.87 over that 686, and then into the 5-day 687.49. If we can clear all that come next week or maybe even tomorrow, we're going to see this gap getting filled, which is near all-time high, 689.27. On triple Q, it's down 0.83%. So what is happening here? You can see we got two gaps on top. We had a gap down here. Then we came back up. We got another gap down from last Monday, which is at 623.14. So we did close one of those gaps, which was at 617, but there is another gap down here from before, and not to mention this one on the hourly time frame. But at least in the short term, if this is actually can hold right here, guys, you can see previous rejection, even this massive bearish engulfing rejection there at 613 bucks. As long as you can hold that, definitely there is a chance for a little bit of upside. Maybe we go back up to close this gap in the short term. So going into tomorrow's session, definitely watch 613, if not 610 gap fill reversal all the way down to 606.85 to the upside. Now, if we try to go back up, there will be resistance not only here at 616.37, definitely at 617. If we can get over these levels, we might get to see that push towards 619 where we spend a lot of time. You can look at this hourly here. And remember, I was talking about this bear flag the other day when we were right up here trading inside this bear flag. And what happened, guys? You can see I took it off the bear flag, but we broke down from the flag. And what happened right after that? We had another bear flag here, and then we broke down again. So you need to see hourly, a reversal candle, some sort of a inverse head and shoulder, bull flag, something here, and then the continuation to the upside can continue. But now we got a lot of overhead supply here, and we need to get over these levels to close that gap in the short term and maybe even retest this trend line here right up here. And if we can get a break, let's say next week, some good news over this trend line, definitely we're going back up to close the gap near 630. Now, if the selling actually starts even really deeper going into not this week, not tomorrow, but next week, keep an eye on this 610. If we get under this range right here, the 613 to be exact, right here, 613. If we close under 613 come tomorrow into closing, that's not gonna be a good one for the bulls. Definitely, you will see a little more downside if that happens going into tomorrow, guys. On DIA, it's down 0.62%. So we broke below the 20-day, which is at 482 and barely holding 480. And this one and also SPY puts that I took on a swing definitely paid. And it was one of the best thing to have, especially if you're not actually long on the market. And if you guys are watching my videos, you know that I'm not actually coming out and pumping the market up and saying, hey guys, it's bullish, let's just go all in here. I was net short on SPY from the top pretty much. I think 688 to 689. That's where I started and then added more into my position at the new all-time high. And that position, we sold half of it on Wednesday. It was great. Almost went in the money. And then this was another one that I took a couple days ago, 480 puts here on Dow. And this one also paid. So year end was really nice. Not to mention, we took some plays, lots of options and shares on Nike. That position was up over 50%. So all these types of trades, and next year is here already, guys. 2026 is already here, and there's going to be bunch of trades coming out soon as the market starts moving up or down, don't matter. We can start trading even more because inside a range, if it's slow, no volume, holiday season, usually you're not going to make a lot of money. And now I think the season is here, so if you want these types of trades, definitely, guys, check out that link down in the description for Patreon. Now, with that being said, Dow here, you can see that 480 definitely a key zone. If it cracks underneath that, we could be going down to 476, and then the gap comes into play right here at 472 almost. To the upside, there will be resistance at 20-day now, 482.34. If we can get above it, watch out for 484.44. And I mean, this could be just a double top here. We just need to take out this neckline, which is at 479. If that happens, this entire move will bring Dow down to this gap easily, guys. And that's why you never want to go full bull mode here, especially at all-time highs. And people were just screaming like, "Oh, 2026 market is just gonna go even higher and higher." We didn't even get there on Wednesday, and market already gave back some of those gains. So we'll see how that plays out. Maybe we see some big moves next year, which is already here. And that if that continues, the market moves higher. That's good, but at least at all-time highs, you cannot get bullish, and that was the whole point of making all these videos, to warn people that hey, you cannot afford to go and just new money long here at the top. On IWM, it's down 0.75%. Now, people that are actually subscribed to my channel, they watch my videos regularly. They know what I have said before about smaller companies going bankrupt. Lots of them out there, including Starbucks, guys. That's not a small company. Look at how many stores they're closing. And that's not the only one. I can go on and on and on. So many companies are filing bankruptcies or closing stores, and that's not good, right? That's not good. If they're actually selling products and they're profitable, they would not do that. They're trying to save money. They cannot afford to lose money. They're already losing money. And then comes the banking crisis, right? Fed injecting money into this banking, system. And I know tons of people on X always posting, "Oh, Fed injected, $3 billion last night. Mega bullish." You have to think these banks are sitting on massive losses. So just because they got some money from Fed, it does not mean that they're just going to go out and invest in the stock market, especially at all-time high. You got to think that, and especially when market was near all-time highs just a couple of days ago, guys, just after Christmas, right? Into Christmas. What I said, go back and watch my videos. Careful, careful. VIX down to 13 bucks. We're not buying calls. We're not buying shares. We're not going long into anything until the opportunity comes. And it's still not there. Yes, the market came down quite a bit, but I don't think we should just go and long the market right now. There could be a lot more to it going into next couple of weeks now that we're on New Year 2026. So IWM definitely telling us a story that yes, we got an all-time high, year-end rally, some sort of a Santa rally, whatever, but things are not looking good. So IWM here trading right above the 50-day 246 to 245, a key support right here because lower band, the support itself, and the 50-day. Underneath that, that opens the door for a move up to 240. To the upside, there will be resisted at 240.65. If we can get over that, watch out for possibly a move up to 252. But on its way there, you can see these moving averages right there at 251, one at almost 250. So, I mean, we have a lot more work to do here on small caps if we're going higher and hitting another brand new all-time high on small caps this year. On VIX, it's up 4.18%, so almost up to 15 bucks. Now, you guys saw this chart not recently when it was actually inside this falling wedge pattern. And not only that, this level, which is a key level here on VIX. You can see time and time, guys, over and over. You can see that 14 to 15 bucks. It's a big support zone. And what happened? We went under almost close to 13. And I said that we cannot afford to go long in the market. And the market cannot even push, that high right now when VIX already down here at this level. Maybe when it gets up to if it was coming off of the like 18, 20 bucks and market was almost near all-time highs, I would say yes, it can go even higher. But look at this. Well, exactly like I said, we got the initial break from the wedge, and now we're seeing continuation to the upside. Again, 14 bucks, that's going to be key zone to hold, and it was holding past couple days, even into Wednesday session. But if this thing crosses over 15, we could be going up to especially 18 to 20, and that's going to put pressure on S&P. And not to mention, there were a lot of calls coming in for 30 bucks. These were further out expiration, so I think at some point you're going to see VIX going up to 25 to 30. I just can't tell you guys because I don't trust into these type of flows all the time. this was technicals. I wasn't looking at flows that we had that bullish falling wedge. We could get a breakout. We got that. Now that these calls are coming in, it makes sense that maybe down the line we see a massive VIX spike back up to the upside, and that would give us an opportunity in the market. But as of right now, even if you're taking an opportunity in the market, just be careful because this thing is still low, under 15 bucks. All right, so I know a lot of you guys are waiting to hear about SLB and even gold, and we need to talk about it a little bit here. I'm not gonna drag this video and make it even longer. SLB was down 6.61%, another gap down and crap here, and you can see, I mean, we came really close to the trend line. We even touched it right here, this uptrend. Now, guess what? If this uptrend actually breaks, guys, if this thing breaks, let's say we get some sort of a candle come next week like this, well, the game over for the Bulls. Even if you look at this weekly candle, I mean, look at this. You think this is actually bullish here? Look at the wick on top. Massive, massive selling with high volume on it. And that means one thing, especially if gold and silver, they take a back seat, guess what's going to rise? We might see some money flowing into crypto market. And that's one thing that I'm watching. So here on silver, well, just this trend line, which is around 63 bucks. If we get under that level, definitely there will be more selling, and this thing can come down easily down to this 61 gap, and then even 58.51, possibly even lower going into next few sessions. Now to the upside, you can see it did close around 64.42, but there will be resistance around 65. If we can get over that, we might get to see a move up to this gap, which is at 68 on silver. Now, GDX, let's talk about GDX. This one also, you can see this trend line is almost breaking. And if this trend line breaks, this uptrend, there is going to be significant downside. So watch out. I mean, this thing is also, this one here did not even show strength where silver actually went up and did close this gap. The one that we had a few days ago, gap down and crap. This one, we still have this gap on top, right about, 89 to $90. So we might get to see that, but gold wasn't, down that much, 1.23%. So this thing, cracks below that 85 range, we could see more selling here on gold. Now, we need to talk about dollar as well. And you can see the dollar holding up, guys. I mean, this thing is still holding up here. And if you go back and look at this monthly time frame, and especially this trend line from the pandemic right here, you can see this is a key zone here on dollar. We can just go like this. And if you look at it, we're actually holding this trend line here on dollar. And from this trend line, we have seen massive, massive moves to the upside here on dollar. And if this thing spikes back up, we can easily go to 100 plus, and that will put pressure on the S&P. As of right now, we're just consolidating here. So watch out for possibly a breakdown below the trend line. That's going to be going under, I would say, 96. And if it's going up, we need to get over 100. That would tell us that dollar wants to move higher and S&P wants to come down at that point. And that's all I have for you guys in this video.